Started. I see people entering the room still. So we will begin just another minute as people are coming in and getting ready to begin. Good morning, everyone. Welcome. Again, if you just entered, we're just waiting another minute, letting people enter the chat so that we can get going. We're going to start in another minute. Hello, welcome. Just another minute and we'll get started with Celeste. Okay, welcome. So we are going to get started. Good morning. Thanks for being here today. Today, we're going to continue MSIC's focus on the future of the movement by welcoming back with us Celeste Cook. She's the CEO of cuStrategies. She was with us back in April and discussed member service and experience in a digital world. And that was a really well-received webinar presentation, so much good information. So I really look forward to welcoming back Celeste today. Today, she's going to be speaking with us about serving the underserved the right way and increasing loan growth and profitability. So today's presentation should help guide you towards how to be more strategic in your efforts to be proactive to serve your members and those in your communities that are facing financial challenges while increasing loan growth and profitability, as well as mitigating risks. So in case you didn't catch Celeste in April, let me introduce or reintroduce her to you. Celeste is the founder and president CEO of cuStrategies, LLC. As a credit union industry strategist, Celeste partners with credit unions across the nation, providing strategic planning services and lending consulting and training. In addition, she provides lending assessment services, sales and service training programs, leadership coaching, and consulting services. She has worked in the credit union industry for over 20 years and has been a professional speaker and trainer for more than 15 years. So we are really lucky to have her back so we can gather more information, learn more, and pick her brain. So welcome back, Celeste. Just a quick note about today's format. Following Celeste's presentation, we do have time designated for a Q&A, so we'll wait until that time to ask questions, and you can send them in the chat box directly to us, and I can read that to Celeste at that time, or you can raise your hand and I can unmute you and you can speak directly. The other thing to keep in mind is that the slide deck will be available to everyone following. So I know last time during the presentation, Celeste had so much great information. People were saying, they wanted to make sure they had the slide deck because they couldn't keep up on notes. So feel free to take notes, obviously, but do know that the slide deck will be available as well as the recording of today's webinar. So with that, Celeste, I'll hand it over to you. Welcome. We're so glad to welcome you back. And I will be turning off my camera, but we'll be right here watching. Thank you.
All right. Thank you, Erica. Thank you so much for the introduction. And thanks to all of you for joining us today. Greatly appreciate it. And hope that you enjoy the presentation, find value in it. We hope to share some real relevant and relatable information for you. And so let's go to slide number 2. Bypass slide number 2. Erica did a great job of introducing me. And so we'll go to slide number 3. And so just a quick overview for today's session. We'll talk a little bit about the economy on the credit union, what the credit union trends are, and what's going on with credit unions with regard to membership growth, how the economy is impacting our growth, etc. We'll do a quick touch up on that because we need to keep our pulse on the economy so that we can pivot. Quick and nimble is a great phrase to use for that. And sometimes we're not as quick and nimble as we should be or could be. And so I think when the economy shifts, then we need to be quick to shift as well. We'll talk a little bit about how to approach creating a culture for growth and retention. And when we talk about growth and retention, we're not only talking about the growth of the credit union, but look at it as a 3-prong just a 3-legged bar stool is the best way to look at it. When you think about the growth and retention long term, we think about everything impacting, have a positive impact on one leg of the bar stool is the credit union. The other leg of the bar stool is members, and the other leg of the bar stool are employees. So as leaders of credit union industry, there are a lot of moving parts in what we do, but the one thing we want to always do is keep in mind that one, how do we grow the credit union and continue to grow it? Meaning the big question that came up recently when I was doing strategic planning session, and it came out of a Harvard Business Review book that I was reading, and basically said the number one question to ask yourself as a leader in the credit union industry, and this is how it's relevant to us, is are we winning or are we maintaining? It's important for us to establish a strategy that says we are winning, not maintaining. So if we historically over the past 5 years have had, 2% loan growth, 3% loan growth, 5%, and we're not accelerating to 8%, 10%, 15% loan growth, the question to ask ourselves always is, what can we do differently or better to get to that level? Secondly, it's membership growth and retention. Then thirdly is employee growth and retention. So as leaders of the credit union, we have to focus on all three components, and they have to work simultaneously. And sometimes when we get caught up in the trenches of operations and we've got projects going on, or we're implementing a conversion, or we're adding, some software, or we're bringing on a new product line, we tend to focus on that one item. And so it forces us a lot of times to take our hands off the wheel of the other moving parts. And think about it like a car. When you're driving a car, I mean, there are a lot of parts to the car. And if you take your hands off the steering wheel, lots of things can go wrong. But then also maintaining that car, and you've got 6 cylinders in there. And if you've got a 6 cylinder car, all 6 cylinders have to be simultaneously moving at the same pace, or your car either starts to sputter, or it can break down, or the engine can blow. And so, as leaders, we have to have our pulse on all the moving parts in the organization to keep it moving forward and to grow, and then also to retain our members, retain top talent. So, we want to talk a little bit about that. And the focus of today's session is taking financial literacy to a whole new level of, yes, supporting our community, supporting our members, supporting, businesses in the community in such a way that we're impacting their livelihood, their lives, and helping them achieve financial success. And what does that look like? So we'll talk a little bit about that. Also, identifying key strategies to help transform our employees into financial solution partners. What does that look like? How do we engage our members? How do we build the confidence in our employees and give them the knowledge and the skill set to truly be able to share? And I always talk about sharing, when we communicate a message, make sure it's a smart message. And I'll talk a little bit about that today too. And then also discover ways to serve the underserved and at the same time mitigate the risk associated with serving the underserved. And what does the underserved really look like? Because there are a lot of, A+ members out there that have 750 to 780 credit scores, but at the same time, because of the cost of living, if their income is at 40,000 a year, are they a high risk factor, not based on character, but just based on the economy and the scale of cost of living? So we need to take that into consideration, and we'll talk a little bit about the importance of mitigating risk through relationship building, which is hugely important. So Tony, if you'll take us to the next slide. So I know if you attended the last session, this is always in every presentation that I do. as leaders and even employees, we're always asking employees to rethink the way they engage. So, as leaders, we're always evaluating and reevaluating, and meaning that if we do a strategic planning session, and it's a 1 year strategic planning session or a 3 year strategic planning session, either way, always look at that as though it's a fluid plan that you're putting together, meaning it's fluid at all times, subject to change based on things, the external factors that we have no control over. We have to always be rethinking the way we do business with people in our communities and our members. Also renewing our philosophy of people helping people. So, we're going to talk a little bit about that today. When we talk about the philosophy of people helping people, it's really important that we recognize that our job is not just to help people who are financially in tune and set up to, you know, um, eight, what I call the 750 club, the 800 club, not the A plus members. If we are truly in the business of people helping people, then we need to help those that are underserved, that are struggling financially, that have scores below 600. And because a lot of times, as a credit score expert, which I've been inspecting and validating the FICO scoring model for over 20 years, we have really created a very defined point system that aligns with the FICO scoring model. And when we think about education, one of the things you can add to your financial literacy program is providing that knowledge of, if you miss a payment on a credit card, on a $25 payment on a credit card, you will lose up to 60 points on that payment. And so I think that education empowers people to think before they miss a payment. So knowledge is very empowering. So think of people helping people, not just our A and A plus members, but our B, C, D, and E members. The goal is to turn your higher risk member into a lower risk member through financial literacy and build a brand around that. So we'll talk about that today as well. And then last but not least, the most important thing is, how do we get our employees just revived and engaged, enthusiastic about wanting to engage our members in conversations, wanting to share knowledge that are going to make a difference in their life, wanting to build those relationships. And the only way you can truly build a relationship with a member where they are loyal to you and they literally will not leave you, is by engaging in conversations. And I always say it's engage in the right conversation by asking the right question and creating the right solution, or better yet, the optimum solution that is going to make a difference in that person's life. And ultimately, optimum solutions are: one, anything that will lower their monthly payments on any loans not with a credit union, credit card debt that's out there, focusing on household and not just the individual member. And I think that's a missed opportunity from what I experience when I'm in credit union world. I travel all over the US and I'm always on site with credit unions, working with their staff, and we have missed opportunities. And those missed opportunities are from us not truly engaging and asking the right questions. So to set your employees up for success, the most important thing is to train them to engage in asking the right questions so that they can connect through the right conversation and ultimately offer the optimum solution that will make a difference in their lives. And my definition of optimum solution is: one, a solution that will lower their monthly payments; two, that will increase their credit score and potentially maximize that credit score; and three, help them eliminate high interest rate credit card balances and debt. Because at the end of the day, 80% of the consumers in today's society have interest rates of average of 24 to 29% interest. Default rates on credit cards are 1 day and 1 minute. You can have a 1 minute late payment because they have due times. There are two credit card companies that actually have a due time of 5 p.m. on your due date. Most consumers don't know that. That is a component of your financial literacy, is to educate people on what's real relevant and relatable to them in their world. And if they have a credit card with one of these credit card companies, most consumers do not read the small print. They do not know that if they are 1 minute late or 1 day late on their credit card, that their interest rate, which is their default rate, will go up to 29%. And we have inspected and validated another credit card company whose default rate is 40% now. So individuals get stuck in a world of 29% interest and they don't know what to do about it. So thinking about that knowledge and training your staff and giving them the tools and the resources they need to be able to engage with people in conversations to say, hey, if you have credit card debt, most people are at 29.99%, and we want to see what we can do to help you eliminate that, maximize your credit score, because anytime you pay off credit card debt, you can gain up to 50 points on your credit score just by paying off credit card debt. And that can be a huge difference if someone is looking to buy a home or a car in the near future, which are your two biggest purchases in life. So that type of education needs to be tied into our, financial literacy programs. But what we want to do is recognize that every employee in the credit union is a financial literacy specialist or expert. If we have the knowledge to be able to share this and empower our members and people in the community to take that knowledge, which empowers them to make better decisions and choices. And then when we can guide them to the right solutions, more than likely they are willing to go in that direction. So we'll talk a little bit about how to get those staff involved, how to engage them, how to get them to engage members, build those relationships through trust and credibility. And once we do that and we make a difference in their lives, for example, we had a member recently whose credit score, because we actually sat with him, it's a holistic approach to financial literacy. We provide a one-on-one personal consultation. So I'll say that again a little more slowly. I know that I'm a fast talker, but when you provide one-on-one personal consultations, schedule time with members to review their credit reports with them, show them what's impacting their credit score, show them how many points that they've actually lost based on the actions that they have and the activities they've engaged in. For example, if you have a collection item on your credit report that's not medical, then you actually lose up to 60 points on those. If you have a charge off on a credit card for $200, that dropped your score 150 points. Having that kind of conversation and sharing that type of knowledge is financial literacy at its best. So there are two ways to engage in offering financial literacy. One way is through seminars and going into the communities and going into your businesses in your community and saying, hey, let us offer 1 hour lunch and learns for your employees. We bring food, fun, and knowledge that will empower your employees to elevate their financial success, and a lot of cases help people achieve financial freedom. And financial freedom does not mean you're debt free. Financial freedom means to the majority of consumers in this world today that I was able to pay all of my bills and I have an extra $20 in my checking account. So think about what's relative to every individual out there and what does financial freedom mean to them. So your financial literacy programs have to be real, relevant, and relatable to all audiences, not just the affluent, those that are doing well, that have perfect credit scores and perfect finances, but more importantly, helping those that live paycheck to paycheck and are looking for that extra dollar, that extra $20, so that they can sustain, pay their bills, and still have some extra cash left over. And they're not burdening their lives with financial debt with credit card interest rates as high as 29.99%. So when you go out to tell your story, which is your brand, you need to be able to share your brand that, listen, we are the credit union that cares, and we care enough about you to educate you. We can do the seminars, but we also offer one-on-one personal consultations. And we will review your credit report. We will show you what's impacted your score. More importantly, with one of the programs I have, we actually do a projection of what your score will be in 90 days and 12 months. So, for example, if you did a loan for someone, we had one member whose score was 482, and we actually did what's called a credit score analysis. We sat beside him, we reviewed his credit report, we did the projection, we gave him an action plan. There are 4 steps you have to follow in that action plan, not only to maximize your credit score in 12 months, but also we educate you on how to manage and protect your credit score. And why is it that it's so important for us to focus on credit scores? And I'm sure that's a question we ask ourselves, because credit scores dictate your payments on a car. So think about that. They dictate whether you can move into an apartment complex in a very desirable area, or if your score is below 625, you have to live in a less desirable area. Your credit score determines what your auto insurance premium is going to be on your car. You can have a perfect driving record, but if your credit score is below 625, there's a good chance you're going to pay $100 to $200 more a month for that insurance. Mortgage insurance protection, if your score is not 800, you're going to pay on about a $350,000 to $400,000 home about $150 more per month, all because 1 point, if you're 799, you're going to pay $150 more a month on a mortgage protection insurance premium versus an 800 score. 1 point determines whether you pay $150 more on a $400,000 home. That's crucial for consumers to understand. And then on a car loan, a score of 600 versus 700 on a $25,000 auto loan, you would pay on average $200 more a month. And over a 60-month period, that's $12,000 more that a consumer, your member, a person in your community will pay on a vehicle. $12,000 more over a 60-month period, all because of that 3-digit number. Your mortgage, home insurance is also based on your credit score. So when we think about what we do as credit unions and say, hey, if we can maximize your credit score, not only will you get lower payments because you get lower interest rates with us, we tend to get lower interest rates with our credit union. What you want to market, because you're marketing to A+ members when you say you market rates as low as. If you market, let us give you the lowest payment you deserve, then you will attract more B and C members because they are payment driven and not interest rate driven. And those are the ones that you need to help and want to help more if we're going to live our philosophy of people helping people. Engaging your staff, getting them engaged is just no more than training them and giving them the knowledge and the confidence they need to be able to share this knowledge. And then the response that they get from members and people in the community, when they get those positive responses, only encourages them to engage more as you move forward. So, Tony, do you mind going to the next slide for us, please? So, I love this quote by Ray Davis. Ray Davis is the former CEO of Umpqua Bank on the West Coast. He grew a 5 branch operation in Oregon to 120 branches in 9 years, and they are now 240 branches in the state of Oregon and Washington. And he stated, and I'm a firm believer in this, and as leaders, we all know this is so true, but keeping our pulse on this and recognizing the importance of managing the process and encouraging and motivating is to really think this way. You can't grow your business without making it better in ways large and small. You have to sweat the small stuff. And then I added to the quote, and you have to have fun doing it. I believe that if employees truly feel like they're helping and making a difference in people's lives, they will engage more. And I think if we can have fun along the way in that encouraging and motivating process of getting our people engaged, it tends to take it to a whole new level and creating that culture for growth. So, if nothing else, sweat the small stuff and the big stuff, because it's a culmination of all the small things that we do, the little things we say and do that ultimately make the biggest difference. All right. So, Tony, next slide, please. So, John C. Maxwell, I have his book right here, How Successful People Think. I have about 10 of his books. And you can see here from that I do a lot of reading and writing and marking up. And he actually defined creativity as intelligence having fun outside the box. It's really important that we recognize if we don't think outside the box, we can't grow exponentially, which would answer the question, are we winning or are we maintaining? If you're not thinking outside of the box and saying, what can we do differently? Because we can't rest on our laurels as credit unions, but we can elevate ourselves through the financial literacy venue to capture more of the market share, mitigate risk through the education and relationship building component, always sharing the why factor. That's so important. Please write that down. Members, we always talk about we need to explain to our employees the why factor behind any change that we do to get buy-in. What's in it for them? Why do you want to do this? Why do you want to engage? The same holds true for members and people in the community. Sharing the why factor, and you want it to be a very clear, concise, compelling message. Why would someone want to switch their checking account from another financial institution to you? Why? And that's training on steroids, because if you can get your staff to engage in clear, concise, compelling messages to compel people to want to switch, to make it easy for them to engage members who are struggling and say, here's why you might want to follow these 4 simple steps. Here's what it will do for your credit score. Here's how much money it's going to save you over the life of the loan. Here's why you don't want to max out your credit cards, because on $10,000 balance on credit cards, you're going to pay an average of $2,500 a year with an average interest rate of 24.99%. And over 5 years, that's $10,000 in interest only that you will have paid in if you continue to make minimum payments. And sadly, that consumer is still going to owe the majority of that $10,000. That's a very powerful example to share with a consumer or a member, a person in the community, an employee of a business in your area, to be able to say, here's why, if we help you get rid of this debt, here's why you may not want to do it again. So thinking outside of the box is just bringing all of us together as a team, putting our creative minds together and coming up with solutions, strategies, innovative ideas, innovative ways. We talk about innovation as though it has to be technology driven. Innovation is behavioral driven. What can we do to create innovative behaviors, innovative conversations, creative solutions that ultimately will make a difference in everybody's life, no matter where, no matter what season you are in your life, whether you're graduating from high school, whether you're graduating from college, whether you're getting married, whether you are buying a new home, whether you are buying your first car, whether you're trying to establish a credit score today. We need to be sure that we are at top mind with every student graduating from high school and college and telling them why they want to be with us. And then most importantly, we have to make it easy for them to do business with us. And sometimes that requires us taking risk, but we can mitigate that risk through technology as well. And that's really important as leaders, to go out there and find that technology that's going to help us identify and authenticate that the person that is trying to open an account is the person that they are. It's no different than me going to myfico.com and them asking me 10 questions about my history in life. Did I ever own a gray Forerunner? Or did I own a convertible? Or did I live on one of these streets? So the authentication of identifying who that person is can be done without having that person sitting in front of you face to face. We have video capability to identify individuals. So the day of people having to come in to the credit union has gone to the wayside. So we need to really pivot and go, what can we do different to make it seamless and easy? Okay, Tony, thank you. Next slide. Now, why is creativity so important? And John C. Maxwell speaks to this as well. One, creativity gives you options, gives you a lot more options when you put creative minds together and saying, what can we do differently? How can we tweak this? What do we need to modify? What tools do we need to bring to the table? What technology can we bring to the table to make it easy to open up accounts? Options is one. Creativities will also give you alternatives. For higher risk members, it's basically, we can do this to help you, meaning I'm not going to give you an unsecured loan for $1,000 when you're currently past due. But what I will do is put a plan together, and perhaps will increase probability of payment to the credit union. So being able to think outside the box to come up with solutions versus just responding to the member's request. So one rule of engagement, hopefully as a takeaway today, is when we're engaging in financial literacy, the one thing we should be doing is looking for the last creativity option, is looking for opportunities to help members and people in the community, and look for the opportunities to build relationships, bring loans into the credit union, and bring in new member, new money, which all credit unions need today. So credit unions as a whole, as an industry in 2024, our membership growth ratio was 2.3% compared to 3% the year before. And they're projecting 2.4% this year in membership growth. We are not capturing the millennials and Gen Zs. They are all going to fintech companies. So it's really important that if we're going to educate these people, these millennials and Gen Zs are looking for credit building products, and they're wanting to know everything they can about their credit score and how to establish a credit score. So create a search engine optimization that includes words like credit builder program, establish a credit score of 700 in 6 months. This is what we do. And if you can put these key words out there and make it easy without making anyone come in to the credit union and develop the technology or buy the technology, use a third party for the technology to create that authentication process to verify that the person is who they are. And so I had one CEO tell me that they did online memberships and online loans for fresh starts of $1,000. They didn't have to come in. And they were paying individuals $300 to open up a checking account and doing the authentication to draw the millennials and Gen Zs, because that's what the fintech companies do. So they were competing with the fintech companies. Well, what happened is that there are some hackers out there on the black market that searched all financial institutions that were offering $300, $200 to open a checking account. And they were all going in, opening up these checking accounts, and they were not utilizing them. So this individual, the CEO, stated he paid out $60,000 for fake checking accounts. Does it mean that you stop offering that product? No, it just means you tweak the manner in which you capture those checking accounts. The authentication process was created to authenticate the individuals, and then they took the $300 away. And basically you can come up with a savings account and say, hey, we'll put $200 in your savings account, and we're going to actually lock that in, meaning you can't access that $200, but then we'll give you a $300 secured credit card. So you don't lose the money, but you give them a solution and start building. But it's through the education that drives the success and retention of those individuals that add value. So options will always lead to opportunities. So always, always offer more than one solution. So that's a rule of thumb on this as well. Next slide. So what we're going to do now, Tony, go to the next slide, is just understand what the credit union trends are for 2025 so that we can prepare ourselves. So if we can go to the next slide, Tony, and look at some information. So on this particular slide, I'm not reading this information. I just want to make it available to you. It's supporting documentation. We utilize it in strategic planning just to help support our strategies moving forward. So we know that home prices have skyrocketed, but we also know that as interest rates go down, this comes from Stephen Richt, the chief analyst for TruStage, and he was stating that, as interest rates go down, people will start selling their homes. Then we'll have more supply out on the market. That means the value of homes are going to go down. But they're also saying that debt is going down. And what I'm seeing in credit union world when I'm out there is that, and I'm seeing it regularly, is that we're seeing a lot of people paying off credit card debt using the equity in their homes. And that's a good thing because they're taking interest rates of 29% down to as low as, 6%, 8%. and that is a great strategy. And so at the end of the day, as long as credit unions are conservative in going only to 80% value of the home, then you're putting yourself in a position where you may not have that member be in an upside down mode if they were to max out at 100%. Once the supply goes up, the pricing of homes is going to go back down. So we need to keep that in mind as we move forward and how we strategize to develop and frame programs that align with your financial literacy. When we're going to be an advocate for members and people in the community, and we're going to educate them with financial literacy, we need to go in with solutions. And we also need to talk about the outcomes of those solutions. What's it going to do for the member? How much can you lower their monthly payments over the long term? When will they be debt free of all the credit card debt? How much interest are they going to save as a result of that? How much can you increase your credit score over the next 12 months so that at the end of the 12 months, if you have followed the plan, we can lower your payment one time during the lifetime of the loan, or we can modify the interest rate and shorten the term of the loan. Those are innovative solutions to motivate people to engage with the credit union and engage in low risk behavior. So we know that auto sales are going to go up. Auto sales and auto loans are the backbones of credit unions. So what are we doing right now to go out and recapture some of the loans that our members have elsewhere? And what I encourage you to do is go back and pull exactly the number of auto loans you have on your books in comparison to the number of members you have over the age of 18. Historically, in my experience over the past 30 years, and I analyze these numbers all the time when I go into credit unions, I have never seen a stronger penetration than about 30%, meaning 30% of your members have their auto loans with you. 70% do not. That's an opportunity to engage in financial literacy, which is, let me share with you where you are holistically, including your car loan, credit card debt, anything you have. And if you have equity in your auto, let's restructure all your debt into one loan with us. Pay off the credit card debt, pay off your car at ABC company, and give you one payment with us. That will lower your payments $300 a month, and over 60 months, that's $18,000 cash you get to keep in your pocket. That is financial literacy at its best. You're sharing specific numbers related to payments, being debt free at the end of the term of that loan of credit card debt, as long as they don't max the credit cards out again, and motivate me to remind me why I do not want to do that. And showing me how much interest I would have paid on those credit cards is a great motivational tool. So use those advantages today to go ahead and recapture some of those loan opportunities through that financial education that you're sharing. And also navigating through the auto buying experience is being able to give your members the tools they need to ensure, through the knowledge, it empowers them to actually get the best price on vehicles and get the best trade-in value on those vehicles. And just at the onset of that relationship, you're also setting them up for success long term. So we talk, Steve and Rick talked about delinquency ratios, that they're not going to go up. Last year we were at 0.91. They're projecting 0.90. So we're maintaining on our delinquency ratio. Our charge off ratio is going to maintain as well. But membership growth is expected to be at 3%, which is what it was in 2023. And the question is what can we do to increase our membership growth through our financial literacy program? And I think if we can reach out to the businesses in our community and provide lunch and learns to those employees, and share with them what they can do to maximize their credit scores, what they can do to lower their payments, how they can become debt free of credit card debt at 29% interest, I think is the greatest, most powerful, real, relevant, and relatable knowledge that you can share that will hopefully compel people to want to reach out to you and say, will you partner with me? Next slide, please, Tony. All right. So when we build relationships through our member advocacy financial literacy programs, why is it important to build those trusting relationships? And we're going to talk about that. So let's go to the next slide, Tony. Why is it important? You probably have to click on that one a couple of times, Tony. That one's got, yeah, just keep on clicking, Tony, till you get 3 columns up there, and then we'll be good. This particular slide, you guys, if you will earmark this particular slide, again, Erica stated that she would give you the slide deck. Use this as your checklist. When you're creating your financial literacy program, you want to make sure that everything you're doing is going to create a win for the credit union, a win for the member, and a win for the employee. What are we doing to create the win for the member? What are we doing to create the win for the employee? And then ultimately, if we create a win for the member and employees, it will create a win for the credit union. As a credit union, we want increased quality performing loans, meaning we want people to be able to make their payments on loans. So if you actually partner with an individual, holistically look at the credit report, identify every loan, every credit card debt they have, look for equity in their home and cars, which so many people have instant equity in their homes because of the economy right now. And being able to pay that off lowers their monthly outpay. And when you lower someone's outpay, you've increased probability of payment to the credit union. When you're doing loans for B, C, and D members, you're increasing profitability because if you're pricing your loans correctly, you want to price for the risk. So increase those interest rates. You want to manage the risk through the relationship, building the relationship through the financial literacy that you provide them as to why they want to make their payments. They don't want to lose 60 points on their credit score. They don't want to give their car back because they'll lose 150 points on their credit score. What their payments will look like in the future when they can't come to you, that knowledge is the most empowering knowledge you can share with someone to empower them to always think, I want to pay my credit union. Increasing membership by going into the businesses in your community and asking for member referrals and paying your members for referrals. So if they refer someone to you and you actually do a one-on-one personal consultation and you're able to get a loan out of that, anything over $10,000, be willing to pay that member $100, because on $10,000, with an average loan balance, average loan yield of, let's say, 7%, that's $700 that you made just because a member referred them to you. That's just the first year. There's residual income that follows that. So think outside the box on how we can reward employees for bringing in new member, new money. Your employees know a lot of people out there that are driving cars that are financed somewhere other than the credit union. And if they convince them to come to you and let you see if you can lower their monthly payment on their car, and you get a loan for that, then reward your employees $100 for that. When you do this and you actually put together a financial literacy program that says, hey, this is what we're going to do to maximize your credit score in 12 months. These are the 4 simple steps you follow. This is all you have to do to protect and manage your credit score. 12 months from now, by following the low risk behavior that we've listed, one time during the lifetime of the loan, we'll lower the payment again. And we'll also reward you for going out and sharing this with your coworkers, because most people have more coworkers than they have family and friends. So why would we not promote a coworker referral program? That's what increases retention, not only with the members, but with your employees as well. So once the staff realize that they're truly helping and making a difference in these members' lives, you get more engagement from your staff and more enthusiasm, especially if you're sharing the success stories. That's so critical in this process of branding your financial literacy program. We partner with you through good times and bad times. Now, the win for the member is anything you offer in your financial literacy program, you want to holistically identify solutions that will maximize their credit score, eliminate credit card debt, lower monthly payments on loans with other financial institutions, and then educate them on how to protect against predatory lending. But also, there's another piece to that: protect their credit score, and their most valuable assets, which are their homes and their cars. And that's so important. And then the win for the employee is the feeling that they have knowing that they've made a difference in someone's life. So you want to make sure you're engaging. And if you train your frontline tellers, I assure you they are your most powerful marketing resource and number one resource for doubling your loan volume. And we have proven it through a mini form program that we use in credit unions to actually engage in conversations and be able to help a member seamlessly and easily allow us to pull their credit so that we can see if we can lower their payments, get rid of credit card debt, help them maximize their credit score. It's a powerful, powerful strategy that will definitely capture loans with your existing members. All right, slide number 12, Tony. All right, so what can we do differently or better to support our members and people in the community, as well as ensure growth and profitability? Why do we want to do it? So let's go to the next slide. So this is one you'll have to click a couple of times, Tony. So if everyone, I know hopefully you've taken copious notes, but take a moment and just jot down, based on what we've shared with you thus far, just take a moment on a piece of paper and write stop, start, and change. And based on all the notes you've taken, just write down 2 things that you might want to stop doing, 2 things you want to start doing to help increase loan growth and membership growth through financial literacy, and 2 things that you might change, meaning we're doing this pretty well, Celeste, but we might could tweak it to make it even better. And if you'll take this strategy, because I use this strategy in every form of training and consulting that I do. When I do strategic planning, this is an exercise that we incorporate. When we train tellers, we use this. When we do leadership training, we use this. We're saying, what are you going to start doing? What are you going to stop doing? And what are you going to change? And they put that in writing, and it becomes their commitment, and those are their takeaways as to what they're going to do. And we always tell employees, don't write it down if you're not going to do it. Great leaders follow through. And if you'll train your employees to think like leaders, they will act like leaders. And that's very important. Next slide, Tony. Thank you. Okay. So we've already talked about the philosophy of people helping people. So on this slide, what I want you to keep in mind is that we want to help everyone. We don't want to just help our A+ members. We want to help our members that are 480s, because we took a member from 482 to 702 in 4 months. Just recently, one of my credit union clients took their member score from, I think it was 448 or 458 to 740 in 7 months. We partnered with this member and other members and made outbound calls to the collection companies and negotiated a settlement and negotiated having the collection items removed from the credit report, which enhances your score and increases it substantially. And that is a financial literacy strategy that we should all be incorporating. So think about people helping people from a broad spectrum, thinking outside the box. And I hope I've shared with you some really cool strategies that you feel like you can, apply immediately when you leave this session. Next slide, please. So a philosophy that you want to focus on with regard to your financial literacy, it should become a part of your brand and who you are. It's the service we're not obliged to give that customers value most. And this is a quote by James C. Penney in the book Customer Love. This is actually a definition of service extraordinaire, a book that I'm writing. And it's what I'm going to use as a definition of what is service extraordinaire. And it's the service we're not obliged to give. And what that means is what the member or a person in the community did not expect. So if a member comes in to do a transaction, but you're able to engage them in a conversation and say, hey, why don't you let us see what we can do to lower your payments on any loans that aren't with the credit union? We'll actually see what we can do to eliminate high interest rate credit card balances, and we'll actually maximize your credit score and show you how to do that. It's just a free service we offer our members. Boom. And make it easy. There's no application to fill out. There's no waiting for 30 minutes. There's no 45-minute wait. There's no denial. There's no adverse action notice. But what it does, it allows you to pull a credit report to see what you can do to help that person. And you'll find that your members have lots of lots of loans that aren't with the credit union, car loans and other loans, especially credit card debt. But they do have vehicles that have equity in them and homes that have equity in them, and they don't know they can use them. And I think when you can maximize someone's credit score and take them from 458 to 740 in 7 months, or 482 to 702 in 4 months, and transform their lives forever through the knowledge that you share through the financial literacy, I think that puts member advocacy at the highest level that it could ever be. And no one can touch credit unions when we provide that type of knowledge and provide the solutions that come with the knowledge we share. The most important thing about financial literacy is not just education, it's solutions, it's outcome. So it's knowledge, solutions, and outcomes. And that's the service that the member did not expect when they came in to do a transaction. Or when you go into a company and talk to their employees and say, we have a free service. We offer one-on-one personal consultation. Next slide, please, Tony. So let's brand our credit union. I feel like I've shared some really good points and strategies on how you can build a brand around your member advocacy financial literacy programs. So let's go to the next slide and kind of see what we've got here. Some branding points. Titles are really important. And Ray Davis speaks to that in Leading for Growth is the name of his book. And it's become my, professional Bible, so to speak. But having titles like preferred partner, community business partner, educational partner, community resource partner, financial solutions partner, member solution partner, member advocacy partner. You notice partners become a driving force in our member advocacy. So if you're going to offer financial literacy, make sure that you're using the word "we partner with you." And then give titles to your employees, because people act in accordance to their titles. And so these are just some examples of some of the titles that I promote and recommend to my credit union clients, which are easy to, people can relate to these. Definitely member solution partner over collections staff. People run from collectors, but they won't run from a member solution partner or a member advocacy partner. Next slide. So some of the verbiage that you can use in your About Us or your marketing material is that we partner with you through life's most amazing moments. And then we list examples. We partner with you through life's most challenging moments. People go through medical illnesses. People go through divorce. 70% of all people who go through a divorce file bankruptcy. That means 7 out of 10 members who go through a divorce will file bankruptcy. Educate me on how to protect my credit score if I'm going through a divorce. That's real important. Have a fact sheet on when an attorney tells you you're protected by the divorce decree. False. You are not protected. What are some examples? If you're joint on a credit card, you cannot be removed. If they miss a payment, you lose 60 points on your score. If they don't make their payments and they charge off that credit card and you're joint on that credit card, you're going to lose 150 points. That's critical financial literacy information to share. People go through job losses. So the goal is to partner with them through that scenario so that we can get them back on track so we don't take a loss. Because a lost loan, anytime we take a loan loss, we have prevented future loans with that person and anyone they know, because they are not going to refer anyone to us. So you want to partner with people when they're going through these life events to get them through to the other side so that we can continue to get loans from these individuals. We can build loyalty, retention, and get referrals from them for other people. Next slide. So the 4 E's of member advocacy branding, and these are my 4 E's and you're welcome to use them. So when I go into credit unions, we tell our employees we're going to engage our members in conversations by asking the right questions. We're going to educate our members with knowledge through financial literacy to protect their credit score, and their most valuable assets. We're going to empower our members to achieve financial freedom because the knowledge we share is going to help them make better choices and decisions moving forward because it serves them well. What's in it for them? We always share the why factor. And through this process, we will elevate our members to achieve financial success. So again, financial freedom is not being debt free necessarily. It's being able to pay all your bills and still having an extra $20 or $30 and not having hundreds of thousands of dollars in credit card debt at 29.99%. Next slide, please. Now, creating your culture for growth and building your financial literacy branding into your credit union internally is the only reason why we engage in financial literacy, to support not only our members but people in the community and employees of companies in the community. Is a great way to reach more people. We have to show people how much we care. And if we're going to show people how much we care, employees need to understand. People feel how much you care through your body language, which communicates 58% of anything you're communicating. Tone communicates 35% of your message and how people receive your message. Words only communicate 7%. So you can tell someone you care about them, but if your body language and your tone doesn't align with it, and you don't provide those, the knowledge to empower them, the way that, the solutions to maximize their score and lower their payments and offer them, outcomes that are going to get them out of 29% interest rate credit card balances, and then build a relationship with me on putting that plan together and partnering with me through this journey to make sure I get through it. And I think once we do that, this is bringing your brand to life. through body language, tone, words. What solutions are we offering? What do the outcomes look like? What do those success stories look like? Are we sharing them? One of my clients actually tracked how much interest they saved their members over an 8-year period. They had saved their members $23 million in interest using these programs and these strategies. And they promoted that on their website. And that's part of your financial literacy strategy is don't just engage in financial literacy, but engage in truly coming up with the solutions and outcomes that are ultimately going to make a difference in my life and give me that financial freedom that I am yearning for to be able to pay my bills and have money left over. Next slide. Members feel how much you care by what you say, what you do, how you say it, how you do it. So keep that in mind if you're going to create that culture. Your employees, if you're going to hire people who truly care and have a passion for wanting to make a difference in people's lives. I can have all the knowledge in the world, but if I don't have a heart that truly cares, that will go out of my way to make a difference in someone's life, will put myself in an uncomfortable situation, feeling uncomfortable and engaging in a conversation just because I do want to make a difference in someone's life, those are the type of people you want to hire. And then you want to reward them accordingly so you can retain them long term. I can train the skill. I cannot train heart. I cannot train attitude. Zig Ziglar says, do a checkup from the neck up. That's attitude. I say, do a checkup from the heart up. That means you care. If you don't hire people that care and truly, genuinely care about helping other people, then 50% of your success is going to be lost because people make up 50% minimum of your success long term. No matter what kind of products you have, they can be the best product, best technology in the world. But if you don't have the right people in the right seats on the bus, doing the right things the right way, I guarantee you, you will never achieve the success that you want to achieve as leaders in a credit union. Next slide. All right. Creating those partnerships. And we're going to pause here because I have gone over my time and I want to open it up to you guys for questions. Erica, we talked about creating these partnerships and I feel like we've given you guys a lot of information. There is some more information in the slide deck, so feel free to take this with you and apply whatever you want to from this. Erica, do we have anyone in the chat room that has a question, or do you want to see if we can engage some participation?
So I didn't have any questions. I know people, had written a message to say they were glad that the slide deck will be available, so they're not having to take as vigorous notes, which is great. We knew, you had said from the beginning that you have a lot of information in your deck. So if anyone would like a copy of that, please just reach out to me, and I will be happy to get that to you. No, I think, Celeste, I think you've provided us with a wonderful amount of information. I think that credit unions really have such a great opportunity in connection with its members with the financial literacy. I think that's a big grab for credit unions, not only with our motto for people helping people, but it's just a great way to bring in credit union members and keep them because of that direct engagement. And from everything you said, that the financial literacy leads to empowerment, goal achievement, debt management, um, even like reduction in stress, for people like you're talking about the ins and outs of credit scores and on-time payments, long-term security, and then just the overall economic impact. And like you said, there is just so much opportunity there when engaging with our members. And that's such a good starting point and a strong foothold. It just helps them bridge the opportunity gap. Um, a,
Yes.
a question did come in. Hang on a second. Sorry. Does MSIC offer a course to train employees on counseling members to help them reach financial freedom? Hi, Kelly. That's a great question, and we can reach out about that. That's something also that Celeste could work with us on. I think that's a great question, and um, yeah, let me reach out to you directly to discuss that. But yeah, I think any kind
What
of
was her
financial
question, Erica?
does
Just out of
MSIC
curiosity.
does MSIC offer a course to train employees on counseling members to help them reach financial freedom? So we don't have a specific course, but this is the kind of great feedback that I love to get from people that attend these, because this is definitely something that I can look into cultivating, and obviously working with Celeste would be a great way to do that. So let me reach out to you directly. But yeah, these are the kind of tools that credit unions need to be able to grow membership, sustain membership, and then of course that brings us to profitability. Um,
Absolutely.
so yeah, Celeste, you've given us so much great information, just like last time. The slide deck again is available. Please reach out, and the webinar will also be available. The recording. We'll get that up on our website sometime early next week. Um, Celeste, thank you so much for being here with us again today. As far as what's coming up for trainings next week, we have on June 10th, it's at 10 a.m. It's a webinar on mastering your image, branding strategies for credit unions. So we hope you'll join us then. And then keep an eye out for additional webinars and programs that'll be added throughout July. I'll get those to you. And again, if you have any recommendations or suggestions, please let me know. This is how we build a catalog that's useful to our credit union specifically. And Celeste, thank you for adding to that. You always bring a lot of great information, and we always enjoy having you here. So thanks for
Thank
working
you,
with us
Erica.
again.
Yes,
And
you're welcome.
yeah, we'll wrap it up right on time. And Celeste, thanks again. Everyone, thanks for being here, and have a great day.
Thank you. Thank you,
Thanks,
Erica, and
everyone.
thank all of you for letting me be a part of your program. Thanks again.
Thank
Thank you,
you.
Tony.
All right.
Take
Take
care.
care.